Have you ever wondered what really separates a struggling amateur trader from a seasoned pro who's consistently profitable? Well, I can tell you. It's not some secret algorithm or a magic stock tip. It's all about what's going on up here, in your head. It's about mindset. So let's dive in and break down what truly separates the pros from the hopefuls.
Okay, so right off the bat, here's the biggest difference. New traders, they're on an emotional roller coaster. They get in, but they have no idea when to get out, so they just ride the highs and lows hoping for the best. Rich, experienced traders, they're totally different. They know exactly where the emergency exits are before they even get on the ride. They always have an exit plan, and believe me, that changes the entire game.
So how do you even start to build a plan like that? Well, the foundation of success in trading and, in a lot of things in life, it's not what you think. It's not about being a math genius. It's all about psychology.
And this right here, this is just a powerful dose of reality. So many people get into trading thinking they're going to find this pot of gold, quick, easy money. But our source is Rich Trader, a guy with decades in the trenches. He's telling you straight up, it doesn't exist. Real success comes from controlling your risk, being disciplined, and having a solid method, period. This brings us right to the heart of it all, the trading mindset. What is it really? It's a kind of confidence, but it's not arrogance. It's this deep belief in your system because it's rational. It's based on cause and effect, on probabilities. It's the polar opposite of trading based on a gut feeling, or a hot tip from your buddy, or the absolute deadliest emotion in the market, hope.
And here's where things get really interesting, because this stuff, it's way bigger than just trading. The principles that make someone a successful trader, they're often the exact same ones that lead to success in business, in your career, even in relationships. These are universal rules.
Let's look at these. First up, patience. This isn't just about sitting on your hands. It's about disciplined waiting for that perfect pitch. Then you've got managing expectations. You have to know you're not going to get rich overnight. That keeps you from getting frustrated and quitting. Education? It's a lifelong thing because the market and the world is always changing. And finally, managing stress. It's actually pretty simple. Just don't take risks you don't fully understand.
So, how do you actually build this plan? Well, it starts with admitting something really important. You're human. You have emotions. Fear and greed, they're real and they're powerful. Once you've acknowledged that, you write down exactly what you want to achieve. Then you create a rational map to get there, your trading plan. But the hardest part? It's easily step 4. Following that map when all hell is breaking loose and every emotion in your body is screaming at you to run.
And this question is the engine of that whole rational map. Before you make any trade, any big investment, heck, any major life decision, you have to ask yourself this. What's my potential downside versus my potential upside? It forces you to think in terms of risk and reward. And if the odds aren't stacked in your favor, you just walk away. It's that simple.
All right, so we've talked about the rules. Now let's see what happens when you ignore them. Our source gives this perfect and pretty painful example of a trade that went completely sideways. And it's a lesson a lot of us have to learn the hard way.
It all starts right here. The new trader admits it. He hates losing. I mean, who doesn't, right? But this deep-seated hatred of being wrong, it's the villain of our story. It's a super relatable feeling, but in trading, if you don't get a handle on it, it can lead to absolute disaster.
See, he was smart. He had a plan, a rational map. The rule was crystal clear. If this trade goes against me by $100, I'm out. I sell, take the small loss, and live to fight another day. It was his predefined exit. Simple, logical, smart.
But then, it happened. The trade dropped by $100. And in that exact moment, reason went out the window and emotion kicked the door in. He committed the cardinal sin of trading. He didn't follow his plan, he hoped. He threw his rational map in the trash for this emotional fantasy that it would just magically turn around. And what was the result of that one little 4-letter word, hope? A planned, manageable $100 loss turned into an actual loss of $500. 5 times worse. That right there is the real, cold, hard price you pay for letting emotion drive the bus.
So what's the lesson here? The really big takeaway, learned at the cost of $500 and probably a week of sleepless nights, it's that you have to honor your plan. That first stop loss, the one you set when you are calm and rational and thinking clearly, that is almost always the right one. You have to trust the plan you made, not the feelings you're having in the moment.
Okay, let's wrap this all up and get to the rich trader's single most important piece of advice. This is the distilled wisdom from a long, successful career, boiled down to its essence.
And you know what? It's so simple, but so powerful. Number one, always have a reason to get into a trade. And number two, always have a reason to get out. That plan is your edge because guess what? Most people in the market are just running around on pure emotion. And this last one is key. If you keep your losses small, they become psychologically easy to accept. A small loss doesn't hurt your wallet and it doesn't hurt your soul.
And I want to leave you with this incredible quote from the legendary trader Jesse Livermore. Look, everybody is wrong in the market sometimes. That's just a fact. It's part of the game. Being wrong is not the problem. The real failure, the thing that does the deep, lasting damage, is refusing to accept that you're wrong. It isn't the mistake, but the ego, the inability to just take the loss that truly costs you everything.